Welcome back everyone, I'm Philip here from BlackBull Markets. Hope you're all doing well. In this video I want to talk to you guys about candlesticks. What are they and how can we use them to understand where the market is going and what the buyers and sellers are potentially looking to do. So make sure to stick all the way through to the end of the video to find out what they are and how do we properly use candlesticks. Also make sure to smash that like button guys, subscribe to the channel if you guys are interested in learning more about Forex and improving your current trading skills. So without further ado, let's have a look at the charts or behind me on the whiteboard and see what we can have a look and learn from candlesticks. Okay, so first of all, I'm going to show you guys just the basic structures of candles. We're going to focus on, just general candle structures. So for example, I want to look at the nice green candle to the upside, and I'm also going to have a look at a red candle to the downside. Whatever the candle struck colors are, we've got candles moving to the upside and candles moving to the downside. Okay, so how do they work and what do they mean? Okay, now if you guys have a look on your terminal, you'll see there's either like an hourly structure or a 15-minute structure or 5-minute structure. So you'll see these time frames on the top of your chart, and what this essentially means is if we're looking at an hourly term time frame, this one candle represents 1 hour worth of price movement. Similar if we are looking at a 5-minute time frame, one of these candles represents a 5-minute worth of price action. Okay, so what that essentially means is it just takes 5 minutes to complete this candle, or an hour to complete this candle, depending on what time frame you're looking at. And what we need to know as well, if we're looking at a 4-hourly, sort of time frame, okay, we have 4 hours worth of price movement. And if we go down to an hourly term time frame, this candle consists of 4 candles. And if that doesn't make sense, if we look at a 5-minute candle, drop down to the minute time frame, there are 5 1-minute candles inside one 5-minute candle. So these just represent the time frame, and now let's understand. Now let's have a look at them to try and understand, what they mean. Okay, so we'll have a quick labeling here as well. So the basics of it is we have our, on this green candle over here, we have our open over here. Open. We have our close. Okay, so what that means is this is where the session opens. So if, let's say we're looking at a 5-minute term time frame. Let's say it's just struck 1 hour. Let's say. Okay, and now this market's going to move, and then 5 minutes past 1 we're going to close over here. So this is that's where the market's going to close. Now we have these wicks to the bottom as well. What they mean is we have our low over here. So this is the low of that session. So the market might open here, maybe push down a bit, and then continue further higher, go back past that open. And so quick example to make it a bit easier. I'm a visual learner, and I'm sure other people out there are visual learners as well. So let's say we're looking at the green candle. The market is moving to the upside. The market now opens over here. There's 1 minute. There's the hourly time frame right now. So let's say it's 1 p.m. So candle, the 5-minute candle just opened. Might push down a little bit. Market starts to reverse, goes past its open structure. It's open, open area. Pushes a bit higher. Maybe it keeps running. Rejects a bit on resistance, maybe, and then closes over here. Right. So now we've got that base of the candle that's over here. So if you guys, this might look a bit familiar. This is called a bar chart. Okay, back in the days they didn't have candlesticks, they used bar charts to analyze the market. We use candlesticks, I use candlesticks. Some people still use these, there's nothing wrong with using them, but I find that candles make it a bit easier to understand or to really see, where the volume lies in the market. These can look a little bit confusing because if you do look on a chart, you could see anything that looks kind of like something like this. It just might start to look a little bit confusing to some people. Because that's kind of the structure you want to see. Now, obviously, with a candlestick chart, it's a bit easier to see exactly where the volume is lying. Okay, so that's kind of how it works, and then this vice versa for this red candle over here. Okay, the market might open, So now let's say it's 5 past 5. That green candle just shut. Now the next 5-minute candle is going to open, might push up a little bit more, come back down past the open point, push to the downside, creates that wick for us, push it back up again, and closes. All right, and on that close level. So that's just kind of how they work, and that's just the basic structure of a candle. So we have our high over here as well. And now obviously for the red candle, it's just the same, exactly the same for the low and the high. And we are obviously the only difference is we have our open over here and we have our close over here. Okay, that's the main difference. Obviously because open of the session closes a little bit lower than when it first started. Okay. So now that we understand what candles show and what they represent, let's have a look to kind of understand a bit better what they're trying to show us in terms of what the market is looking to do. Okay, so I'm just going to get a black pen out here, just to kind of illustrate these kind of things. So obviously we just covered it, so we just had a look at these. Let's say we've got a nice big candle to the upside. Let's just say, for example, this one's green. So what this means is the bulls have taken over, the buyers are in charge, and vice versa for the red candle. If the candle's coming to the downside, let's say this is a a colored candle or a red candle, whatever. Just means that sellers are in charge. So if you guys hear me talk about bulls and bears, essentially what that means, the bulls mean the market's going to the upside, the bears means the market is going to the downside. Now, where this kind of came from, I don't know who made it up, but essentially bulls, when they attack from the down to the upside, and when bears attack, they attack from top down. It's just where it came from, okay? So if you guys hear me talk about that, I'll just write it down here. So bulls means up, okay, and bears means down. Okay, we'll just so you guys can understand that. Okay, and then we have other candles, like we like them to call them dojis or hammers or falling men or falling stars. Sorry, hangmen. So these are structures that look like this. So if the candle's going to be white, it's also going to be a candle to the upside. Okay, and then we have the other one, which is a black one or a red candle. Okay, similar structure. Obviously, I'll talk about what they mean in different sort of terms. What they show us in the market, and on the other one, obviously, we have just the vice versa. Obviously, there are slightly different variants. These aren't exactly the same. If you look at the charts, they might look similar, so they're not going to be exactly the same. The body might be a little bit bigger, the tail might be a bit longer. So just take this. Don't look at these and say, I have to see a candle like this, right? This big candle might be a little bit smaller, just kind of take with a pinch of salt. And then we have our normal dojis, and we have the gravestone dojis and other sort of dojis as well, okay? So these are the different sort of candle structures. Now, let's have a look at what they mean, okay? So essentially, these obviously mean that the one side of the market is in charge, okay? In this case, the buyers are in charge. Now, these are candles we do not want to be executing trades on, okay? We don't want to be taking trades based off of this candle, because this means that the train has already left the station. We've missed it, okay? You're not going to try and jump on board when the train's already traveled a significant amount of distance before it, you want to wait for it to slow down, maybe stop, something along the lines of this, and we can use these candles to get back on board or even take the train from the start of its run, okay? So these candles, as traders, we don't really focus too much on these, right? These mean, entry-wise, these almost mean nothing to us, okay? This just means don't trade right now. Let the market sort itself out. Or maybe let it slow down a bit and give us an entry signal. These are just to define where the market is going and where the strength is lying, okay? So I'll get rid of these, okay? And we'll start focusing on these sort of candles over here. Now, quick example. If the market's going up, we have a resistance over here. Let's have a look at this structure. Okay, so these over here are the same. They're just for different trends. So I'm going to use this one for uptrend, and these obviously will be for a downtrend. Okay, so I'm going to get rid of these because these are pretty much the same. They're just different trends. Okay, and similar for these two over here. They're the same, just different trends. Okay, so I'll get rid of those. Okay, so now let's have a look. Let's say this candle shows up, we're seeing the market push, and this one starts to show up, right? Okay, now remember, this candle still shows potential to the upside, okay? So we're not just going to take a trade just based on that candle, because what we have here, the market has rejected it, okay? It's rejected a resistance, okay? But it's still potential to go further higher. So this candle technically still has energy, or still shows that there is potential energy in the market to go further high. So I'm not going to just go ahead and say, oh, the candle rejected, there's a wick to the top, buy resistance, I'm going to take a sell. Okay, because the next candle could very well bite you in the butt and just go ahead and do this. Because this could have just been a break where the market decided to take a breather and then just continue further higher. Okay, so we want more confirmation alongside this candle. Okay, so we want to add something we want to add some of these combinations in here. Okay, and I'll quickly show you what we're looking for, what I generally look for. Okay, so we've had this candle now. Now I want to see a candle that looks like that, or even a doji along the lines. Okay, so what we're going to see, I want to see something that might look like that. Okay, this is what I want to see. I want to and I also tend to want to see this wick go a little bit higher, but that's not really too important. Okay, now what this shows is we can now see that the buyers are slowly losing their power. Okay, the bulls are losing and the bears are starting to take over, because we can see the bulls the buyers try to break that resistance. They tried again, but this time they failed completely. It came all the way back down to the open, and this is generally speaking where the bears take over, where the sellers take over. And we can see a candle that looks like this. This, for me, is a great sign to say that the market has now given me, is now convinced that it's completely rejected this resistance. Okay, the bears have noticed it, they've taken over. Even better is if this candle can come way below this close over here. That for me is a great conviction to show that this market has completely now decided to turn around. Okay, so essentially these candles over here, what they essentially mean is, we can see that the market is starting to lose interest. Now we can't just take a trade just based on one single candle. Okay, all right, we can't just take a trade and say, well, I've got a doji, let's say the market's going up, I've got a doji, I'm going to take a sell because the market's lost interest. Okay, no, because it could be a breather like we saw over here, and the market could continue further higher. And now again, we've got that big candle, so as traders, we're not going to go, oh yes, okay, the market's going to go further higher, I'm going to take my trade, because now it's kind of silly, because you're taking a trade, only place to put your stop losses back down there, and there's no real resistance back down there, because we could easily have a candle that does something like this. Okay, right, so we don't want to be playing around with the market like that. We want to have kind of convictions. Now, so if we want to, let's say, take a trade to the upside after, if the market's still going in an uptrend, for example, we can maybe see a doji. And we go, okay, all right, the market's starting to show a bit of rejection, or starting to slow down a bit, and you get this nice big candle to the upside. You go, okay, let me wait, I'll see what plays on, what's going on. We might get a candle that looks like this now, with a nice big black candle. Now we're starting to see, okay, well, the market's starting to show a bit of an interest that it's, this is starting to play out as a support or resistance area, support/resistance zone. Okay, so maybe we could look for a candle. I like to look for a candle that looks something like this. Okay, so this for me is a good sign, because now the market's rejected. This support is starting to hold. Okay, and now generally speaking, we have a candle that does this, with a wick that comes nice back down and then starts to push further higher. Once it starts to turn green, there's my entry right over here, and we can start to go further higher. Right, so the big thing is, guys, candles show where the market rejects, and they show kind of ideas where the market might give you another opportunity to get back into it. But all it really takes, guys, is just take your time, have a little bit of a look at the market, see how the candles react, and understand how they form. Okay, we can use these to implement rejections in the market. So the one thing I found about reading books, I've read a couple of trading books in my time as well, I found they're a bit outdated. Okay, so as a trader, we can't just read a book and things change. Businesses change. That's why not all business books are still relevant. That's why in school, pretty much if you finish that semester, the next book for that semester, the same semester has already been updated. Okay, so it's the same with trading. The markets continue getting added, more information, more traders are coming in. It's just getting a bigger and bigger, more popular sort of environment. So it slightly changes. So we need to, as traders, we need to be able to adapt. I'm sure what I'm saying in the next couple of years will be made invalid, and we'll probably have to make another one on this to see how candles react again. But generally speaking, as a trader, we want to see rejection wicks. We want to see wicks rejecting along support and resistance zones, because remember, as traders, we want to be trading from zone to zone to zone to zone. If it breaks, we're going to go to the next zone as well. Okay, and that's all we do. And we can use candlesticks to help us confirm where the market is going, guys. So if that helps, I hope it does, guys. Make sure to smash that like button, subscribe to the channel, guys, and let us know down below if there's any other sort of videos you want to see, if there's anything you didn't understand about this video, if there's anything you want us to clarify. Let us know down below. We'll be happy to make videos about that as well, guys. From us here at BlackBull Markets, thank you so much for watching. Stay tuned. As always, trade safe.